Hello, this is the Chart Profit video, approaching 3.5 hours into the trading day, Friday 3rd of November. This from the pre-open today. We're looking at the E-mini S&P. Actually, this was released shortly after open today. We've had a minor 20-day point of control emerge here at 25.73. I said that a value area, one of these, printed below that level would be the first sign of minor weakness. You can see there's a lack of imbalances on the chart here. There's no red or green indicating significant selling or buying for a good few days, but we have not seen significant selling now for 53 days, which is quite a stretch. It seems to be the case that even in the minor time frame, the buyers are supporting any dip in the market before significant selling or red is marked. So 25.73, let's look at that on the intraday chart. This is a half-hour chart, comes in here. So today's day session, which started on this blue bar here, has found support just above that level. In fact, on the minor, very minor, halfway from this high to this low. So currently E-mini holding up very well on the really minor time frame on that support, and above our first level long-term support, 25.49, the 2-month controlling price. We are seeing in the sentiment some extremes, which I'll talk about. Let's look first of all at the breadth. Daily breadth indicators for New York look like this through Thursday. All currently dipping here, as you can see, relative to the price action in the New York chart above. There's a bit of a negative divergence going on here, but currently the bottom two indicators are holding above their levels, which we use in the breadth chart, or rather on the pulse chart in this breadth section in the middle here, so that remains green. And at the bottom, again with the price action, we can see the negative divergence with the price momentum chart at the bottom. Trend, according to this indicator, this daily indicator, is still up because it remains above zero, but the momentum is diverging from the price action, which remains steadily up, with the controlling prices on the distributions of the spider and the E-mini suggesting that we have a target for price, up here around 260. If we reach that level, price acceptance up there would be bullish. If it's a valid extreme of a distribution, which I think it may be, we'd see a pretty swift rejection at that price. That remains to be seen, but currently, apart from these divergences and the sentiment indicators, which I'll discuss, market remains pretty resilient. Okay, so first of all, we look at the RIDEX ratio, or my version of the RIDEX assets ratio for the sentiment. This was 2 weeks ago. The ratio was down here around 13.4. 1 week ago, a chart I showed looked like this, where we just peaked to actually a new extreme for this ratio, and this week the ratio has got even more extreme. We're up above 18, which is kind of ridiculous. 18 times the assets in the bullish funds than in the bearish funds. 2 weeks ago I showed this chart. We were talking about the bull fund assets, which remained relatively low. We knew at that point that the bear assets were on an extreme low. But the bull fund assets were kind of here. 1 week ago we saw bull fund assets rapidly increasing, and I've expanded that chart out into data all the way back to 2007 over here, and we're currently at the highest level for the bull fund assets that we can see pretty much in my database, which does go back to about here. So we're seeing extremes in the RIDEX data, and that emphasized by the fact that the bear fund assets, again, at their low point in the database. So a real extreme here in the retail mutual fund data. If we look at the equity funds, including ETF inflows in the Lipper US fund flows data, there was an inflow in the week to the 1st of December of 3.6 billion. So you see the 4-week flow in black here, hitting a multi-month high, but not as extreme as we saw earlier in the year. What certainly is at an extreme is the investors' intelligence data. Newsletter writers This week the bulls percentage reached 63.5% and the bears fell to 14.4%, and the net, the bulls minus the bears, at 49.1%, and the ratio of bulls to bears at 4.4, the highest since 1987. Now we find, and I certainly find, that the sentiment indicators that we follow are much more reliable and useful when you're looking extremes at the other end of the scale. When you're looking for a market low, they tend to be more reliable. Nevertheless, we are seeing extreme enthusiasm indicated by our sentiment measures at the moment. Just referring back to this, 2573 on the really minor time frame, and remembering that we're printing above this level today. The first minor sign of weakness from the E-mini S&P would be a value area printed below that level. Let's look at the spider chart. Looks like this. Very close today at the end of this week to its all-time high. Recent price action clearly higher. Small caps, we're looking here at IWM, which is the Russell 2000 ETF. Not the same picture, somewhat lagging the price action of the larger cap spider. UK FTSE 100 large cap index, the UK large cap on this chart appears to have made a higher low, very close to confirming that if it breaks higher above this important level 74.13, and I think quite possibly has closed at an all-time high today. Actually, certainly helped higher yesterday with the fall in the British pound relative to the dollar. This dotted line here, previous resistance, representing the halfway point from the Brexit high to this low. So currently printing below that level at the end of this week, but here's the important level for me, the 9-month controlling price at 129.95. Price below that would indicate a test of the 15-month, which is a little lower here. Number of things to talk about here on the Euro FX chart, which we have gone over before, but this pattern from the low earlier in the year of higher highs and higher lows has been broken recently with this kind of price action here, and the possibility of is this inverse or is that just the head and shoulders? Anyway, that kind of topping pattern appears to be in place, and this neckline appears to be resisting price action at the moment, so I'm sure the chartists will seize on that. We're also pushing down into that lower Bollinger Band, and that's my 40 period lower Bollinger Band. I've got a little reference up here. The closest that we have is the major down here at 113.29, but the price action right now for the Euro FX chart not very encouraging. Another chart which looks quite positive for the dollar is the dollar yen chart, and we have the 2-year here at 111.30. Looks like we had a higher low here above that level, and in the minor time frame we look at the half range from these 2 points, which is this dotted line, and again on that minor time frame looks like a further higher low on that point. So this is a pretty bullish looking chart, dollar yen. Dollar index itself, again looking at the 40 period Bollinger Bands, where we found resistance here. We talked about this last week. We're currently pushing up into that upper Bollinger Band, and we did find minor support here above the 8-month, which was the first indication of strength in this chart for me. And again, there's that head and shoulders kind of pattern. Longer term strength for the dollar index to me would be a higher low, just price consolidating above this level, 95.50, which is the major. The apparent strength there in the dollar. We're looking now at gold, and as you probably expect, we're seeing a weak end to the week most likely here, but the important level, which has been with us now for a long time, is the major at 119.84. Was clearly support at this point here. Price printing time underneath that level would put GLD, the gold ETF, into a pretty weak price location. USO, the oil ETF, on the other hand, having a good week and finishing strong here. The indications recently were, well, let's just go through it from the halfway point from the high there in 2016 to this low. You've got this dotted line in the middle there, this halfway point. There's resistance here and again here, and then we popped above it and we've held, and all this consolidation in here above the major at 10.14, first indication of strength, and then that kind of confirmed it. So this is a strong price location for the oil ETF. And we'll finish with the T-bonds ETF TLT. From this low earlier in the year to this high, the dotted blue line is the halfway point. It was support exactly here. It was tested but came back here, and now we're printing back above 124.40, which is the 10-month. The big support on this chart down here at 119, which is the major. Currently I don't look at this and think this is a weak chart at all. Okay, that concludes this week. Once again, I wish you a good weekend and thank you for watching.